side of the globe who I don't know, never heard about, only read. Right, the money that they control. So some persons cannot hand over their money irrevocably. Because remember with the trust, what happens with the trust? Right, and so if you're from a civil jurisdiction, most times they will understand that that means, or they fear that, all my control is someone in the Bahamas. But in most instances, right. No, but then it's going back to what Sharon said, they want to have more control. Because in the trust, the second law has more control, and then it can be considered a sham. So to avoid all of that, people do this creature called a PTC. Yeah, you be beneficiary, but he has control. The trustee controls. Designated person, yeah. But he runs this. In our jurisdiction, they have created the PTC, where a person can have their own trust and be trustee of their own trust. Right. And that person can appoint whom they wish to sit on the board, provide their own signatories to a bank account, make their own investment decisions, decide their own beneficiary, and decide when to distribute it. Yes. Rather than giving everything. You can do that in trust, right? But the main reason is they're fair. Irrevocably, they fair. For tax and control purposes, it is best if the sector is the director of the PTC. It may not be good for the sector to own the trust company, as there may be tax implications. So the PTC is not mentioned in their will. So what the settlor structure is ownership. So how would the settlor structure is ownership for tax purposes? That should be found. So how will they structure it? So how would you structure it? No, not just to show of your PTC. That's in the instrument. What's underneath the PTC? The trust. The trust. What's above the PTC? There's assets. Go back. Why would they establish a PTC? They'll give all the reasons why. Right, so he has two options. Give us be or a registered representative or another structure. Hmm? What? No. No, protection is under trust. That's not what it calls up.
How many letters?
What? B? Oh. Or, if you want to, you can put the new one. What's our new product? No, where is CTC at? Still the new entity. No, that's over here. This registered representative does it. Ownership structure, remember now you're layering for tax purposes. Confidentiality. Management. Okay. Kind of entity, that's why I use the word entity. No. Yes, you do. Uh-huh. What's executive entities? No? Unknown? I gotta make sure this is on the exam. Bahamas Executive Entities Act 2011. Online. So this one has a designated instrument of ETC. This has a chart. This would be cellular. This is our dying business that we try and grow. This whole trust and PTC, yeah. This performs only executive functions, okay? That's why it's called Bahamas Executive Entity. Like the RR, that's the president, sign across. I can do some of the key characteristics of the BEEB. What's wrong with you? I just say that. That's not why I said not to send me back, because you can't see. Yes, you came in late, so it's close. Some of the characteristics of a BEE. limited liability, no share capital, limited liability, no share capital, no beneficiaries, no minimum level of assets required, no beneficiaries, no minimum level of assets required, continuity, you know what I mean? I know you. It can be established for definite or indefinite. Yeah, but it's, you can say the period you want it. The names of the founder and executive entity counsel remains confidential and are not for public information. The names of the founder and executive counsel remain confidential and are not public information. We have to check with one again. He is wrong. Come on. There's nothing coming out.
Esatto, confidential. Huh? What is the confidential? Unknown.
Oh yeah, why? Keep calling Mark. The registered office of the executive entity agent must be in the Bahamas. Same way the registered office must be in the Bahamas. Mr. Paul, I couldn't understand. Bye. All in. Wow. What happened? Let me see. Let's begin. Downstairs. Why? Come here. He won't call anymore. There's no requirement. There's no requirement for the EEC. There's no requirement for the EEC. That's the Executive Entities Council. Yes, this is the latest picture.
Say it again.
That's what they are. They are leaders. But he just sent him the letter. He's still calling. I'm gonna put my finger in here so he come and get you. You did already? There's no requirement for the EEC, officers or other supervisory body to be provided by residents in the Bahamas. Executive Entity Council. What happened?
Say it again. What happened?
You say you'll do the patient
Supervisory.
and the slides is just brief.
What after supervisory?
Verifying for the EEC officers or other supervisory body to be provided by residents of the Bahamas. To be resident in the Bahamas.
So you're saying this needs to be registered? Person,
All the persons,
all
right?
can be outside.
Yes.
Everyone, everyone.
And so they, to be the top company, then you have the PTC. And the PTC here will have a registered representative in the Bahamas. That's why it's going to be set. See,
You're fine.
it is a little like dictation.
God, this is all common in do so.
No, they have filing requirements. Listen, yeah, you're doing a regulation, job now, you're doing taxation.
Okay. You have something on the file in the file.
No, I don't have it here. It could be in the app. In terms of what being a part of the council. Probably directorship. But the main document is the charter, and the act sets out what's supposed to be in the charter. Charter is the document. Only one I can, that appears it would be Securities Commission.
So they, yes.
Those are one of the best of us. But I guess it's, no, but hold on now, but if you have a BEE and you have a PTC, that has an RR, will come under the central bank. But you'll be looking from the RR in terms of the documentation, and he's supposed to do the due diligence, so you wouldn't even get to the BEE. See what I'm saying? You want to make this. And RR is in your jurisdiction. Yes. So you don't even go here, and you don't go there. But then for tax, if that is then for the big, okay, we'll look at when we go to tax and tax issues, we're gonna look at some of the things we mentioned last week. So let's look at some of the executive functions. What can it be? He can be a director of a company. When I say he, that's the BEE, the entity. He can be a director. If you say the structure.
Yeah, so that's an alternate.
Yeah.
So wait, am I understand, sorry, Ms. Ak, am I understand, when you say, so this structure, what's with this, you're saying if you take this structure, this is an optional structure or this?
A PTC can be owned by a BEE, can be owned by a purpose trust, or you can have a licensed trust company, or you just have a registered representative who provides services. Well, in most instances, it has one of the piece on top. You have to layer it.
I would think it is.
Yeah, you stop here. Now, based upon what you get here, you could raise questions. That's the product.
When the have the information on the
Field of job.
But that information could be available. No, you said it's confidential, it's not public information.
Confidential.
So even if the has it cannot be disclosed.
BEE articles can be used to provide additional government information, not public information.
So even if it's not mentioned,
This is not public.
it's not public.
So let's look at the functions. A BEE can be an executive, a director of the company, can be a protector, could be an enforcer. Director, protector, enforcer. It can be an authorized applicant of a purchase trust. So I can change the structure. You can have a purpose trust and bring BEE in as an applicant of a purpose trust. And so the BEE becomes an applicant of the purpose trust. Then you don't see who's behind the BEE. It can be a foundation council. So you can take the same thing, a BEE, and you make it the founder of a foundation. It can be a foundation officer. It can provide investment advice. Founding council. So you could ask Mr. Pender when he comes to this next picture. Some of the latest thing that he's going to do is tax initiatives.
All these can be initiated, all these can be,
All of these are already there.
but we have the tax, but, I mean, we're on taxation, so we are fine with, like, the discussion was to find where the tax leads, right? The tax leads and the BEE, the BUD, the PPD, and all that.
I don't, it's not the tax thing.
But, so that would be what, what kind of tax would that be? It won't be bad. It would be under, like, inheritance tax or.
Inheritance. Capital gains.
What's the benefit of the BEE?
Confidential. So PTC gives a settle of comfort if he's following one of these structures. It gives a settle the ability to run their own companies rather than the state. And this adds a level of confidentiality. So we're gonna switch gears. Let's look at some taxation issues in the United States. For the state reform, this was one of the things. Someone really only face. We're gonna discuss it.
Inheritance to magnify economic disparities and are probably the largest barrier to achieving sustainable While inherited income is distributed fairly evenly across most of the income distribution, the amount inherited rises sharply at the top. The amount inherited is also highly correlated with comparative inheritance is therefore limited intergenerational economic stability by providing an important safety net and source of income that is unrelated to the
You agree or disagree? You agree yourself. Wrong person.
It's a barrier. Because one person will never really know. It's a barrier to them. Maybe to decide to do it. Already they are parenting from their parents. But it depends on the ongoing state.
Right.
Right.
You know you can't see, come sit up here.
I'm trying to hit now.
Oh, okay. You killing me. Agree or disagree? Why? Can I listen to it last class? This was his point. He made this point because he said, why not? Why don't we start with an inheritance tax? And then he elaborated on the disparity between the rich and the poor in the Bahamas. But this, so you just acknowledge it's you. This is one of the discussions they had in the United States about estate reform. Sharon shaking their head, someone's coming to them. So that's why they want to tax them. The Prime Minister said he's open other forms of taxation.
I remember talking about this last week and, what's his name? Similar, right? But,
Now you remember,
I didn't forget, but I
discussion.
right, so how would we go and tax them now? Because inheritance is such a long time. Is there a time limit when you see this inheritance? How far back can you go?
I don't think you should go back. I don't think it could be retroactive. You can't go retroactive. So that's what I'm saying. We're talking about the point of inheritance. How would that be feasible at this point in time?
Yeah, but
It was only 40 years ago.
it was important.
I'm just saying.
The government make
You may not
cuts.
want to do 40 years, but you can go back. If you,
All of this is that we try to. No, the problem is when you try to inherit it's not possible. But that's the much forward.
most likely, you would have guessed that.
No, yeah, inherit, it's true. 10 to 1 you have to will or you could not will, so you can pass on.
No, but what's
So you can't say that.
so you can comment. Y'all finish already? Is it a good idea? The tax?
They want to get money. They want to do it.
But in the context of the Bahamas, listen to Sharon.
How could you go back and have someone, I inherited a picture property from my years ago, so now you never tax it. How are you gonna do that?
No, we tax you when you pass it on. You're going forward. When you pass it on, then.
tax that forward. Guess what? So guess what? So then,
So we already went
No,
over that.
sorry,
So we go
sorry.
down Baltimore, that was taxation on the
Same time.
I'm
Ah, but in the US, that's why it's US.
Why is this going like this? What do you mean,
But it's also, so I don't know, I think people just say
Yeah, that's why.
inherit, estate don't mean only property.
No.
Estate is not only property.
No.
It's not only land.
Some people have that insurance policy.
Yes, well, that's estate. Yeah.
So there's a couple people you tax, eh?
But predominantly,
So how much income will be derived from those couple of people?
depends on what we put it at.
Yeah, it depends on, that's the thing.
You can start at just
So-
like, you can start,
so
you're talking about
then put it-
15% on utility.
But the more you
No,
so
the
the
tax-
more you
no.
bring
So much
the more you bring
How much
up
money
these
you thinking about?
But the more you bring up these issues, the more you have persons
I think there's
coming up with methods to
overlap. I
evade
think
the
there's people
taxes.
smaller than that.
And that's what they always try to
Make
do.
up.
That's why they
Is this one?
Yeah, so therefore, you have properties or estates that's not necessarily
And then the wall, if that's what
You
you're
know,
doing.
the way they're going.
Eight
But
47.
they're coming up with all these.
Have a quick read, start
In
reading.
essence, every property in the house is considered value for $100,000. So anything over $300,000, charge over
They don't have any, they have more.
over $300,000.
Yeah.
When you get
Okay,
to the back.
read the next issue they had. It's all in the same way, but it's the second issue they discussed for estate succession. Yes, ma'am. They're short. This is the next issue. Which one? The first one is what? Okay. Yeah, that's the next issue. That's the next, the two issues that they discussed for estate reform in the United States. In the paper I just gave you. I want you to quickly read their reviews.
Oh,
You see, so they had to conclude, that was the first issue, and this is the second issue.
so both of them are reviewing.
In that same document.
You want to read all of this? Sorry.
I don't want you to read all of that. What did I say, Sasha? What did I say?
Serious.
Read the conclusion. We already analyzed the question, the first one, we didn't look at the second one, but let's look at the conclusion, let's see what they came up with. You'll read the rest later. Okay?
I thought it was me.
Y'all had a lot of talk with the first one, but not with the second one. You agree with the second one? Estate taxes critical for the fairness of the tax system, and that's your position.
That was the I knew nobody had some of that, so I never really got into that. I just think it was
No. How you do that?
Okay, for example.
That's some of that, how much some of that inherited?
Nobody wants.
So you don't want a minute.
Right, I don't want.
He ain't even over to your inherited.
Majority.
Maybe.
I don't know, I just don't want.
Because you want other values.
Right.
Where's the
I don't think so. No, I don't think so.
What's that argument, son?
No.
Zero.
She's saying that if she inherited $1 million,
Right.
she doesn't want to pay the taxes. So she want to give it to someone else.
And then that did.
You
And
want
let
to
them
give
pay
the
it.
inheritance.
You give away your money.
But I think how the law works when the person who's inherited gets it.
To certain.
Look, the
But you still get a
You're trying
chance.
to, huh?
Well, because
It's
it's
gonna be
like-
taxed.
If in the US, you still be charged.
Give it away, you gotta give it away if you want it.
Yeah, so you gotta
Yeah,
pay that
accept it.
anyway once you
Yeah,
get it,
yeah.
so you might as well keep it.
Once it's earmarked for you, that's yours.
But the taxes aren't gonna be that much.
Tax.
But the tax gonna be,
Yeah, you can take your
What
own.
she's saying is high.
if it's high.
No matter what it is, but they ain't taking it.
So they give you
Alright.
It's not your resident inclusion.
Huh?
That's what I'm saying.
You
You
said what?
said they threw it away.
Yeah, no, it's paid.
You only take it off
Give
some
them
money.
money. 47.
They didn't give you like 50%, even though 50%.
Inclusion.
Yeah, that's the best.
Yeah.
They give you $500
It's not coming from your income, it's coming from something you.
Even if they want half, they can make that.
That ain't what she's trying to say.
I ain't even
Give it to a
Yeah,
charity.
they did 17.
I ain't even
That's where you give it to a charity, so you
Yeah.
can, my exercises, you can get some.
You can get some of
So
it.
some form.
That's $500 and you don't take out. That's $500 and you do that.
Take that now.
I take it now.
So in the house, you don't
That
have
might
to
be
do that
different.
much.
You have to pay more. But still, that's it's not big, but it's still, you don't use it. That's what it's still.
So that is not big deal. The conclusion, Shamika's finished, we wait for the rest. Yep, what?
Overall, I like the last one. I like the last one. We should perform it as two. As two class and everything. Keeps, it stabilizes what it's saying is, it stabilizes the class differentials.
Would that work here in the Bahamas?
I mean, our system. No, but that's what they're saying. The people who are self-made, okay, you have a million.
We're trying to find $200 to $300 million. We're
Right.
not gonna get it from the web shop.
No.
No.
But-
Okay, we decided that last time.
When you get that much from that.
But the thing is, What? You
How much
get
do
more
you
than
think
that.
I get from them?
You get more than
Because
that.
you get 10 cents now. Right.
Listen, we can, if you look
No,
at.
he had a comment there. Hold on,
Oh,
let's see
sorry.
what you can say. Yeah, it's two different people. Yeah. But you know, but the same asset. No, but it works on the person. The person. What you was going to say?
I'm going to respond to the bond.
Yeah, go ahead.
If you're trying to raise $200 million, okay, we need to get that money from what's already in the country. We can't ask somebody to come up with it.
Yeah.
And who has the money where you actually come up with that amount?
So that's why they look at different avenues.
Right, and this is the best one. And I'm only saying that because
Okay,
I still go back,
okay.
I still go back,
Okay.
there's only certain families in this country that have
Let's
control
look
over
at
economic.
let's look at what all of the taxation
Brenda, which
that's
is here.
currently on the books. Okay, so let's go. You know we have RPT. What are the tax we have?
What is that? Income, import, import dues.
Let's put import.
Import.
We don't got excise. Okay. That's a tax?
Every 2 years I go in.
That's not a tax.
Okay. What license? If I live the benefits.
Business license. Business license.
Excise.
It's compulsory not to pay it.
Business license, yeah. National insurance should be.
National insurance.
That's almost like income.
That's a social.
That's what it's a security tax. Okay, alright. So let's put NID.
Yeah.
What's the next one? That's another one.
Business license.
Business license. But I pay everybody.
No,
Not for you.
Only because this is big, but it's still a tax.
It's a
Okay.
tax.
It's a tax because the businesses are still
Okay.
gonna funnel that fee
All right.
down to you when they
Business
buy your
license. What else? What other tax we have? This is the Bahamas tax regime. And remember, as an offshore jurisdiction, we're categorized as such because we're offshore because we have no tax. Alright, so,
But then if you talk about
hold on,
the
let's go
Bahamas,
now.
if you talk about the Bahamas tax, then you have to talk about the mindset on that side, because like business license ain't covered all of that.
No. So you gotta go regulatory fees.
So you're regulatory fees.
There's stamp tax, registration.
Because the
have stamp tax.
businesses are paying their price.
Okay, what else?
Okay.
Hotel encouragement, okay.
Yeah,
So that's the hotel tax. What else? But they still pay the tax.
There's tax.
And we have, well, we talk about the driver's license and all of those.
Yeah, but they have fees. But they have fees.
So what about it?
So we need that
That's what,
miscellaneous.
miscellaneous fees?
Yeah, we have miscellaneous fees.
So that we driver's license, what else we do?
Yeah.
That's what the road, what else we pay?
Driver's license, the car insurance. I mean,
No, that's not
insurance.
insurance.
The car license, registration.
Oh, yeah.
Yeah.
License,
Anything else?
registration.
Tax bill. Or police record, yeah. Okay. Firearms. Yeah, but we're looking at the base. We're looking at the base now. So what I'm saying, okay, what I'm saying is we could go on and on with the miscellaneous, but let's look at our tax base.
Very small.
It's very small.
Yeah.
Open your eyes and see it is very small. And if we look at what would be the largest contributor for tax, it's this.
And they can't
And this.
can't collect it.
We
We have a job in trying to collect.
Exactly, that's the customs. No, exactly.
No, because they
So when we look at it, these are the two main ones that they're looking at. They've already increased this. They've already increased this.
That's what regulatory.
Yeah, the regular, no, what I'm saying, now they want to implement that goes with that.
Reduces the excise
They're
tax.
gonna reduce that to that.
Yeah, increase that.
Right, so, because this is based on
Consumption.
consumption. So if you look at,
That'd be pretty easy to control.
yeah, you get that as a steady flow.
That'd be
This
easy
is
to
when you
control.
feel, this is when you feel like the,
You gotta put gas on.
Oh, but you know your.
Yeah.
That's a big one.
yes. So when you look at that is consumption. And if we add to this, inheritance tax, and people ask for corporate tax.
People even ask them income, they just don't want that.
I rather
Consumption, so that.
But you notice no one is talking about inheritance tax.
No.
That's why, that's what we do.
Let's turn to page 644.
That's what we did.
Last paragraph on the left hand, 644. It says currently,
No, she didn't. I don't know that.
currently jurisdictions apply 5 general approaches to taxing wealth transfers. And there is a chart. But inheritance taxes are by far the most common. Extent. Inheritance tax differs from an estate tax in that it is based on the amount received rather than the amount transferred. Theoretically, this would not make a difference if the rate structure of both taxes were flat. But in practice, all wealth transfer taxes have rising marginal tax rates because of annual or lifetime exemptions. It's incremental. Remember when we did the UK last week? There's every 10 year, there's a review. Right. Among inheritance taxes, there are 3 types. An annual inheritance tax applies to the heir based on the amount received in the current year. An accession tax is the same except that it applies to the amount inherited over a longer period of time, typically the heir's lifetime. And finally, an inclusion tax requires inclusion of inheritances in the heir's income tax base. So you tax once, and you tax twice, and you tax 3 times. Because remember now, when you inherit, everything doesn't come at one time. Things come over time. So if your father or uncle say, I left these things to you, it's not automatically be transferred to you automatically. They come during different periods. So all 3 of these inheritance taxes have been proposed by a number of commentators and have their advantages and drawbacks. An inclusion tax would lay the tax rate to the heir's ability to pay, but would permit extensive gaming by applying a much lower rate if inheritances were spread out over time. Depending on the year, it could result in the 10 percentage point, a 15 percentage point rate cut, resulting in labor income being taxed at a much higher rate than extremely large amounts of inherited income. So you see, this becomes very complex when you decide when to tax. So you could implement an inheritance tax without going back and still get the same effect. And you can change it over time. You just make the rates flexible.
What's the registry system?
No, well, everything else.
And then it takes so long.
I'll give you a good example. I'll give you a good example. I'll give you a good example in terms of registry, and then this whole process. I'll give you 2 examples. I personally, I went to request a certificate of good standing, as a fee. No. $25. Alright, so I project, wrote my letter, I dropped it off. 2 weeks. They said to be ready in 7 to 10 days. At the same time, I dropped off our annual returns. All the documents that we need to file, what the companies are. All sealed. So I did about 10 days, that's yesterday. She looks up to me. When did you request that? I said 10 days ago. Okay, that's good. That's how you do it on top of your head. She said, well, you see, it's a long process. Why? Okay, because you know I'm already beginning to fume. I said, okay, what's the process? Well, when you go to drop off the returns and the declaration, that goes to scanning. That's a different department. That takes a very long time, miss. I don't know, I don't know when I'm gonna get those back. But I do have your request for the certificate. Now, what you can do for me is, you can go, no, she said if I want it, you can go back to the office and get me copies of what you submitted. You bring them back to me, ask for me personally. And I'll prepare for you for next year.
That's the next time, right
Okay.
there. That's the next time, right there. Because when you ask one, you gotta learn a test.
Yes. So what I'm saying is, before we even go here, like most critics say, we gotta get the system right. And that's the message you need to carry to the next one.
I think that's why we want to go back.
No, you can't put someone you can't build on the shaky grounds.
I know what I understand that, but I just feel it's the easiest way to go.
And it's more control and you can cover.
But if you could start a system that's based on computers, you're now not relying on your government populace. I know you're not relying on your government populace. You're now relying on the public out there. They come from the same stock. So the same way they can't find nothing, they can't find nothing. The same way they take long to do things, eventually they will take long to do things. The same way they gripe with everything else, they will start to gripe. Too much filing. I can't keep up. I need my money. I can't get it. It'll be the same thing. And that's why education is key. So even if they wanted to just have a forum, something like this, but break it up even slower, what is taxation? What is a taxation policy? Why do we need it? What will it do for us? And then you take it and you break it down by sectors. How will this affect each sector? Will it deter business or will it build up business? How are we on a competitive edge? And that's the knowledge that the people need that they're not getting. But I mean, the facts, the numbers don't lie.
No, I
Let's
understand.
change it.
I understand.
But we do realize that even when we are in a deficit, the amount that you requested may be lower, and there may be a way whereby you can even reduce it even more, your request, if you would fix the problem.
No, I agree. That's why I'm saying I think a lot of Canadians don't have much faith in the system as it is to say, okay, we're going to put more money into the system as it is.
So if we look at VAT would be easier, like everyone said, this is a consumption tax, and we control out there by the merchants and we pay it. There are other forms of taxes that can reduce it. And if you put in other forms of taxation, then the percentage of VAT can be decreased. But why would we say tax ourselves?
We can say, yeah, it's good.
Will they say tax ourselves?
Yeah, well,
That's the question you have to ask.
See, I think they want to know what fair.
Simply, get the logic behind it. If we introduce inheritance tax, who's being taxed?
the ones who
Okay.
did it.
All right.
So it's
That
not
is
fair
another
to
number.
fairness.
Why?
But they had 80.
We ask the next person that. Why not? That one we can take off 50 million or the 200.
More than
You're
that.
already getting from the July 1st, probably another 20, 30 million. Now let's chip down at this now. Let's chip it down.
Yeah.
Why spread it over all? When we could reduce it and the burden is less. Why doesn't it come up? When we do income tax, who's being taxed?
All workers.
The workers, the real workers.
That's what I wanted to ask.
No,
If
all-
Say, the company that wouldn't affect you. I mean, apart from you take it out of the salary, like the.
Your salary.
No, it wouldn't affect the actual company.
No, that's corporate tax.
That's what I'm
Since
saying.
then, the different forms of taxation and they have different effects. With the VAT, it takes it out of the hands of the government as such. They just get the money and they administrate. We pay the tax. They just collect. They don't have the headache, it just flows in. It's automatic. But the government has to stay within their tax policy. Coming back, where's the price? Don't realize.
When you don't want it,
So, I also have in your package, send it around, chapter 5. Found this on the internet. The workbook. Just have a look. You're gonna get it electronically. No, all it's the same thing. Almost the same thing. It's one document. No, one doc. It's a chapter. It's a whole chapter. One 72, 173. Let me see the one you up.
I think it's okay. I know I feel I kept it silent.
So you can understand how trust actually works. Taxation of the trust.
We're gonna get that one.
Boy, don't ask me when.
Oh, but you can't have the other one.
Someone got out the copy at the end.
It's not like I feel like they try to implement the whole we cover tax, which makes it even more.
Go ahead. Even that may work.
Yeah, that would. If they ended up like 7,000,
Yeah. Yeah. So even that
yeah.
could be implemented. But again, I'm telling you, look at the focus. Look at the focus. Look at the drive. Nobody is not. I don't think that people are saying we don't want that full stop, you know. And they're not saying that, not just that the rate is too high. The point is that people who are going to be paying it cannot pay for things now. And so that means that when someone goes in the food store right now, today when you go to the food store, you will meet somebody who needs $1 or $2 to pay for the 3-4 items. Everybody sees that every day. So imagine if you put that on top of that.
Because it's hitting the poor.
It will hit the poor, because the poor right now cannot buy what they need. So I'm saying you have to look at it. Yes, you may say that is what IMF says we need to do, but you have to look at the populace. Can we really afford it at this time?
Yeah, but we have to afford it
Well,
because
we only can go on what they tell us.
no, but they have to. There's some
What?
other- I think there's some other implications. I think the devaluation of the dollar will happen if we don't do it right. We have a
So
lot
you
of
implement that and then what? what happens?
No, I'm not saying that, but
No, but I'm saying if you implement it, then what's the effect of the implementation? If people cannot consume, what's going to happen?
they want those who can borrow more money. They will be able to go to someone and say, well, hey, you can borrow more money because we have implemented this. So we could.
And what's the effect of that?
Also,
More taxes.
More than.
You get it right. It's more debt. But I'm saying, when you look at the people, what happened to the people?
No, I agree.
That's what you have to look at. If you look at the income strata of the Bahamas, you put it in a box. How many of us are below the poverty line? See what I'm saying?
But it's, yeah.
So you have to put the whole thing in the perspective when you put a taxation policy.
We can say the average income is in the country.
Average. I don't think the sisters only tell us about unemployment. What's the average salary? It was online. What is it? 20,000?
I would say
20,000. How much on a week?
400 a week. 400.
How much on a week? Huh?
That's
We're doing
400.
the average now. Let's go. This is okay. If this is the average salary per month. Over the population, how many fall within these?
They don't come back to the average.
I don't.
Hold on. If this is 20,000 per month is average,
That's not average.
350,000.
It's 384.
Yes.
15.
If you look at
Eighteen
How much?
thousand.
384.
So how many people fall in this bracket?
That's 400.
But how many people fall in this bracket?
Not much. Not much.
That's what I said. That's
Okay,
That's
so
very
take
high.
this. You
Oh,
raise
that's
this
about
number.
right. That's about right.
Alright, so how many 200,000 make that?
Averages are
Come on.
high earners, we have very low earners.
Average
That's what makes an average. You gotta be in the middle.
Average.
So
How
the
many-
average consists of mostly civil servants and those employed by the taxes. Because those are the two largest employers
And how
in the
many is
country. So they are not gonna be earning,
20,000.
I don't think any Atlantis employee hitting that level right there.
That's too high.
20,000, you know, that's good.
Yes.
I'm thinking,
$15,000.
It's too high, sorry.
No, that ain't
18,000.
You going to That's all right.
I think
Okay, so if you change it to
15 or
15, how
18.
much does that be?
huh? You think that's about right?
And now this employees what, 5,000?
5 or 6,000.
Civil
I
servants?
think especially
Civil servants? How many civil servants we have?
Well, the same thing.
24,000.
And the financial sector? 4,000?
Not much.
Yeah, that's a good one. That's a good one, 4,000.
4,000?
Yeah.
Okay, alright. So let's add that up. What you got? Now, when you go to small businesses, they don't pay their employees like that. We don't put salary.
I saw you that you can get.
350.
No, sir.
That's too much.
Average. That's not average.
That's,
I think that's average. That's average.
That's what I,
But
that's
I
average.
think that would be.
That's average.
When you combine the high and the low, that's what average is.
175.
Everything's, as soon as I did
Construction.
it's only around 20-something is average.
Construction? We add some construction people. How many people in construction? 2,000? 2,000? How many people in construction? 2,000? Okay, so we had 35,000. What else? You wanted to add small business? How many people in that?
You know, when you get on top, most of them now hiring.
Exactly. exactly. So let's go, how many people?
Yeah, I'm coming.
That's too right. We don't have many people in small business.
Yes.
Make it decide.
Less than that,
What?
less than that.
No, but we look at making this.
Less than $250,000.
They make less than, so they don't fall in this bracket.
Because they
No, but we're looking at in terms of average salary.
That's what I'm saying, I don't think that's, I don't
That's
know if
right.
that's average, it's not.
No, but I'm saying if you're gonna look at income, we're talking about out of 200,000 people that work in the Bahamas, only about 35,000
Get that much.
get that much.
Okay, and what I'm saying is that.
So all the rest are what?
But there are people who earn less than, I think you count that too. Because it's not.
No, we,
No, we're not looking at in terms of income, that's we're talking about applicable to the class. Who has the disposable income to afford that?
I think we must 75,000. 75,000 people earn about 350. 75,000. But you're the highest, yeah. But we are the 200,000.
Yeah, I go with her.
75,000 people.
Yeah.
Yeah. And then you have the higher earners and then you have the lower earners.
So how many?
And for 125.
Making what?
Either higher or
175.
less. Either higher or lower.
So you have 175?
No, no. The average is, you have some, I'm thinking of 125,000.
Uh-huh.
You have maybe 50,000 or so, making less than 350.
Yeah, she
I have that. I have, it's 200,000 employed
And that's,
minus 75,000.
which is the average.
That leaves
And then you have the highest
125,000
earners and the
employed.
low earners. That makes up the 125.
That's the 125.
Who make it below?
75 and 200 and,
Yeah.
right, okay, right. And so all the rest of these are unemployed.
Pretty much. We got what?
Out of 125, how many are the higher?
Right? So you have
A small
150,000, right? And over this 125, all of them do make.
What will be determined high earners? Anything above the average? Or we
Yeah.
just say,
Yeah.
okay.
Yeah.
I'm talking about a lot.
Yeah.
No one house. Population.
And then you talk about all the population,
At least average and below.
And how to talk about it.
and the ones who are in the lower category and the worst are.
So you can put all of it into perspective.
Yeah, they are.
Good background.
Oh gosh.
But you got, I mean, if you want to go to, I mean, that's only fine, but inheritance, no. And I mean, I'm saying, I believe it works, I believe that's what we need. But I mean, I'm saying from the point of view that there's a small amount of people.
But don't forget now, the populace, the inheritance tax, populace, passport.
No, but they
Yeah.
got pass it. No,
That's the same reason the other one.
Exactly.
yeah, but it's, I mean, the average person, we don't inherit, we don't inherit, people in that high category or higher, the people who have all the money, they're not coming out on no property, yours are making noise on the street, but
That, no.
they can be signing petitions, but they're in the background, they're trying to win the world or something.
Think so?
You don't think so?
I think some businesses, something that they don't have.
So they can't say, want to see that? But,
It don't make a difference to me.
It'll make a difference.
really?
Yeah.
You don't think so?
They pass that on to the
So they have to pay the
lower.
money, they have to pay the money up front, number one.
That only can make a cash flow issue in
Only a
the
cash flow.
They have that.
Only a cash flow issue, they cash initially.
Meaning that?
Yeah.
Yeah, please.
But that after,
They don't want to see that.
because they don't
pass
put
it,
on
the
more
bill
cash.
No, and bill pass.
I know why, yeah, he was making a lot of noise. This is his consumption, every time he goes to use the machine, they have to pay the back. And he's gonna have, he
We have a
gonna
problem.
see, he can see a
Yeah.
faster
Yeah.
decline in his profits than other places. Super value is already seen it.
I think Kelly said more.
Yeah.
Yeah, Ruby Roberts already say he think about what?
what was it, how much thousand?
But he's already seen a decline in his registers.
That's like, no.
He already out.
But he already
Increase his price, increase the price to the yes.
Yeah.
Right.
So it's not, but
See, there's a profit margin that's coming.
but then I believe that, well, I believe that Kelly So's on the sea, Kelly's the house open up, and you're open up to somebody and see. They don't want that much, they don't want you to see that
More
much.
transparent.
I mean, you want the shipping company, you want the retail store, and everything in the middle.
And you'd be able to
And you would tell
also,
me,
right, the tax,
They don't
what
want
they'd
that.
be able to see exactly what
they
they're
rather,
paying.
I believe they'd rather pay, and then, not only what they pay, they ain't paying the.
Taxes, what they supposed to pay.
Taxes that they're supposed to
They
pay.
become public knowledge, that's what it
They
is.
ain't paying them, so they have to explain.
When you go inside, when you have somebody to order them, they see what they register, they see what they say, this is.
You see much
When you see an inventory, when you see an inventory item, if you compare the price with the custom side, they don't want you to find out. There's some most of the thing that you see.
So this must be a lot. This one is the EU's perspective, and it's a two copies, one succession,
Thieves.
dealing with the same issue.
Anybody that's big and dog in a small business, even if they still petty.
Huh? No copies. So from the European Union perspective, it has to do with complexity in cross-border. Remember when we had the law succession, we spoke about foreigners going in properties, jurisdictions. And we will have to come to the Bahamas law, receiving the cross-border, one of the key issues when it comes to the law of succession in the European Union. The complexity of cross-border succession makes it difficult and expensive for individuals affected to plan what should happen to their estate when they die, and for creditors and heirs to ascertain and vindicate their rights. This situation is exacerbated by the fact that the period surrounding the death is emotionally charged. The same issues arise when the cross-border element involves another state and a third country. Simplification of the law applying to cross-border succession has been sought for some considerable time, but without success. At a broader international level, a number of conventions have been negotiated within the framework of the Hague Conference of Private International Law. The Hague itself has its own laws and trust. So whenever you're dealing with succession, you're dealing with conflict of interest laws. Domicile. Whether that's domicile or person before. Whether they married, what did you know what handle science?
Also, we need that now.
Email it in. Now, maybe not. What I wanted us to do now is, okay, myself, until I can find it. I have downloaded before the inheritance comparison between Australia, Austria, Belgium, Brazil, Canada, China, Cyprus, Czech Republic, Denmark, Finland, France, Germany, India, Indonesia, Ireland, Italy, Japan, Luxembourg, Mexico, the Netherlands, New Zealand, Norway, the Philippines, Poland, Portugal, Russia, Singapore, South Africa, South Korea, Spain, Sweden, Switzerland, Turkey, Ukraine, United Kingdom, United States, all in comparison. So, just to get a feel what's involved, I'll give a couple. One person that have all of them at the end. person that just take the whole one. Huh? Don't forget all of these source documents to write the final exam.
To do what?
They're source documents. When they write the exam,
Use all of them.
they use all of these, yes.
What is close book? This is close book.
I need to get the count.
You didn't have a book yet.
You still don't have a book?
So you're not gonna do that, that's not nothing.
Why do you think you just want or two? Don't stable it, someone can take all.
Yeah.
One person can take all of them.
That's the countries.
There's only one book, you know, the other six.
Well, I'll give you another one.
There's no need to say.
Yeah, I'll mix it up. What? Shouldn't Huh?
We had to read this.
You know what the fuck you can read it? What I'm saying is a source document. You can just write a comparative question. And so if you have a general idea of how we're doing it now, you'd know. Why you all picking on Jesus? No, we do that. They prepare questions and all. I don't know how we I can find right now why they quickly look through this and we want to compare. Let's look at, don't forget now, at the end of the day, the next presenter is coming to speak about our proposed legislation. So you need to have good perspective when you speak.
We don't have to close the one side and the second side.
Yeah, our proposed legislation on
Is that the
taxation.
proposal?
More or less, to do with estate. Yeah, estate. Everybody has one? Didn't get it? Oh, okay.
Yeah, but.
Have a look, and then let's have a discussion.
That's the only crap.
Anybody needs another one?
Probably, yeah.
How many you are?
I don't know.
How many you got?
I mean, but.
Yeah, United Kingdom. You do like
Wouldn't be a bad thing.
I got two. I got two.
Yeah, we don't want today.
You want me to pick country?
Another one? United States.
I would like Ireland, you know Ireland. You know Ireland.
All right. Let me see if I find Miguel, and then let's do a comparison. Or somebody can ask them, who has a piece of the Netherlands? And Netherlands. This is what it looks like.
That's what we're like.
The full dog.
Oh.
Yes. As I was looking and looking and looking, I finally found it. You get the whole dog. Well, one person get the whole thing when I'm finished. Anybody can take it. You have it? Okay. Doesn't mean find Miguel and then let's. What you have? Somebody else on. Someone else. Yeah. Okay, let me see if Miguel's downstairs and let's you looking at
That's
it?
why you're not gonna find it.
That's page 40, so let's see what's the difference compared to what other people have. Or they can't find it.
Yeah, they can find it, but where they looking for a crash. It's not. I told you all that from last week.
Yeah, it is.
I don't know, but it's not the crash.
Hopefully it is okay.
They don't know where it is.
Even if it's stopped, that's something somewhere where it can take off.
But that's in some bush or somewhere.
Why you trying to tell us? Osama bin Laden commission that you didn't hear that?
But hold on. They say they see the 79-foot thing in the water, right? They never really what that was in there. They didn't even say what it was.
But they said
It was nothing. They ain't say it was. They ain't saying nothing more than that. They say they in the plane.
No, but they didn't find
What is
it.
what that big off? Look here.
They were shut down by someone who was within it. But then they found that the plane traveled another 6 hours.
Yeah, the plane was
last
traveling.
thing. They're too easy to become.
No, they
They turned twice. They already found their turn twice. And they do things like that to confuse them, so when they do find out they can see this, they don't make this part of them change.
They play like that fly. How long can one of the jets
Folks, how we doing? What is going good? What after this one? Yes, ma'am. Alright, folks, as you all aware, I went to Scotland this week. Met with my accreditors. Go over the exam. Course itself. There's like nothing is finalized as yet. Because I still have to give them stuff. Like for instance, for this class. Alright? But we went over, it's already been covered. No, it's going to be a closed book exam. Alright? It's going to be a closed book exam.
I know.
It's book memorization. You understand what I'm saying? And open book, you'll go right to it and find the answer. Okay? Here's what we're going to cover. Ryan Pinder. Well, his section on fundamental taxation. A PowerPoint there. Right? Sam Wilkinson. Section.
Hold on. Ryan Pinder.
Our second class was yeah. Wilkinson, we briefly touched on the tax laws passed in the Senate, so forth, US, so forth, and so forth. Okay. Yes. Then we have Terrence Richards. Please know the factor, know the tier. He has two documents here. The tier. Yes. They're going to briefly touch on what he did in chapter 25 in the U.S. taxes and okay. Definitely everything in Mrs. Archer's section, fundamentals of trust, all of that. Okay? Everything from her section. And I know it's in a draft mode, but the regulator VAT, our VAT, regs, please get rid of it.
The proposed legislation.
Draft. When I said draft, the draft. That's a very. Now, tentatively the exam, we probably might look, as I say, they're still waiting on some documents from us to put it together. Yes, all be multiple choice. All multiple choice.
First time.
Okay, sorry, the textbook. No question will be taken from the textbook. But that doesn't mean you read it. I don't know if anybody had a chance yet. But it has some good case studies. does touch on VAT in chapter 9, so forth. Okay? But please, the overall objective of this course is for everybody to be well versed in tax.
So, sorry,
Go
Miguel.
ahead.
When you talk about the textbook.
70%.
When you said textbook,
This year, sorry.
No,
Who's still missing? Oh man. You do? Oh, you didn't take the money?
or when you said, you said there are case studies in this book, or just chapter 9?
No, there's some case studies for Latin America and Caribbean. Take a look at it. It's more for your reference. Basically, this book here. Okay? That's a good one. Who's lecturing next? Linda is coming on the 22nd and 29th. He is going to go over the draft. No, Mr. Joan Roll is ready to come on April 5th. Okay? And then we probably wrap up everything on April 12th. Okay, now as I said, I will keep you all up to date. Everything I still talk to Scott, I'm still finalizing everything. But it is going to be a closed book, multiple choice. Minimum right now is 100 questions, multiple choice. Maximum would be 150. It's going to depend on when all information is in. Okay, so that's a mark at 70%.
Our exam.
Now the date, I can't give you the exact date until they give that to me, but we're looking at mid-May. Mid-May, so you all have at least 4 weeks to study after your last class. Alright? Now that, Easter break, so forth and so forth. Now, as I said, the draft, the VAT bill is a draft, could be changed. Any significant changes after you all sit the exam, so forth, so forth. We will definitely update you all with that. Okay? Okay, I know this is a pilot program, but we'll make sure everybody on the right track. Alright, so, as I said, taxation. A lot of questions, I can tell you right now, a lot of questions will be heavily favored on trust and the background. Okay, and I'm pretty sure Mrs. Archer is tying up the reason why trust and financial services then it has to do with taxation. Correct? She's linking the two together, right? Although in the draft, because you see, this simple actually does it, there'll be no taxes on financial services. And so forth. Well, I can't say for now, alright? But I will definitely update everybody again Saturday and then again Saturday. It's finalized. But I say it's going to be closed. Now this last one, it's going to be the factor, it's here, ministers, fundamentals on taxation. Start, I know that's VAT legislation is pure lawyer, So the lawyers have an advantage, I guess. But yet, oh sorry, I was going over the exam. Okay, I can. Right. So let me read. Yeah, let me read book. Ministers. Definitely. That's with Richards.
Richardson talking about factors.
Yeah, factors the foreign. There you go. No.
Really go into
Yes, no.
we got in chapter 25.
This year?
You gave us a $100 on that?
Yeah.
Oh.
And this year?
This one, class so frequently asked questions.
That one right
Also,
now.
how's that?
Yes, okay.
Everybody should have this. If you don't, let me know. Okay, and Mrs. Archer's Fundamentals of Trust, Offshore Trust, all the trusts. All the financial services. Right? And then when you can't sleep, read the VAT regulations. Okay?
Yes, social by email. I mean, all your questions day and night. You
See me, I even before. What's the last one? Well, Marcus, you can go to the answer. This ain't how.
Tax is a reference subject.
I'm excited.
So memorize it.
Memorize that and memorize
Even
Hey, do you know we realize that it's hard?
I know that it's harder, but I can't.
Huh?
Is it a one?
No.
Who has to make it easy?
Thank you.
No.
Take it, the easiest questions.
Not a one.
I'm just saying.
I didn't get it. I have some sort of
Thank you.
you can do that.
Yeah.
Propose, if you ain't printed out, you can probably. If you all ain't printed out, you can't see.
That's yeah. He said this by email, but
I send it out. I send it out by email.
this all gone.
I get that.
So it's the after the.
You don't get this? Okay, who doesn't have whatever after class? I can give it here. Come, let me email this to you all. Alright? I can give you all the information on what we have so far. You're gonna get a jump drive that'll even be better. We put all the whole course on the jump drive.
What about those
Love it.
questions and
Yep.
answers?
So I promise that, right? Yeah. Let me send a reminder.
Let us know when the test
Isaiah, you can talk to them this week. Between 2 and 3 hours. After they have more information, okay? No, he said
Now,
70.
now you are referencing.
12 months, yeah, 70.
Hey, you moved up. You got upstairs? Miguel. You said just the case from the textbook, right? Just some of the case studies.
No, there's no questions from the textbook.
No, I know, but just the case studies you said would help.
Yeah, I mean, we have this, you have the book, this book. You see how Argentina implemented their stuff, how this one, that, other countries, okay? Yeah.
No, he said there's only on five.
Yeah, no, but
Implementation.
Now see, why you wanna say it like that?
But you won't be tested or anything yet. This is good for reference. Very good for future reference. This? Yeah, I sent it by email.
Long time ago.
When you first sign up, I said, yeah. So, alright. If they do this, last week, right? Read that.
I just put it in the text. So all these
Alright? That's that full side. Updated.
And you also gave us a fact.
So our next 2 lectures will be within the study on road.
Tia is tax information.
Okay, who else is Mr. Muck? You? And you? You again? Sometime this week.
Yeah, I didn't get it.
So no, sir, 2 more lecturers.
Miguel.
4 more classes.
Miguel.
22, 29, 50, 12. 4 more classes. And then y'all can.
You give us these handles, we should go there, right? Because I came with these.
Yeah. I have everything on file too. Okay?
On the back. That's what it's.
It's been direct.
It's on the next thing, and then we got it. And then sunshine. I can't think of what getting on the ground.
I think so, because remember, they canceled the class. Remember, the class was canceled in January. The class was canceled to the end of the
Oh, yeah, right. Yeah, I thought that class was last week though.
No. So what class was canceled? So they make himself the one. Yeah.
Because we were studying all the other stuff.
Sergeant.
Relevant stuff.
Anyway, I do one of my.
What's that?
This one of these.
Oh, okay, yeah, because I don't even.
These are different.
All these make them one program. But these are. Everybody have. You got the problem. This is all one. Focus on each country.
Okay, everybody have it.
I don't need two. I need two because
You got one of these? Okay, let's move on. That's all, that's yours. Okay, so let's start with sharing. In Australia and Austria.
I don't want to.
In Australia and Austria.
Why could you get Australia?
In one.
Some people have three.
Okay, all right. So tell us about the tax regime in Brazil.
They want to read the
Go ahead, Captain Brazil. How about Australia? How about Australia? It's Australia now. Here and now?
There's no net,
Say it again. Get it behave. Say it again.
in Australia, there is no inheritance tax, no gift tax, no real estate tax, no real estate transfer tax, no endowment tax, no net wealth tax. All states and territories, there is an exemption from stamp duty. That is the investing properties in the executed deceased person. This also applies to the transfer of assets to the beneficiary of the deceased estate.
All of that is exempt.
That's the transfer duty tax. And then under the other section, limited circumstances arises upon death where the immediate tax liability is included when asset transfers on debt to the charity, superfund, or foreign resident can have capital gain tax force. And then where the immediate capital gain tax liability can arise where the discretionary trustee provides that the trust is to vest on the death of the specified individual, and where benefits in an Australian compliance super valuation fund then your funds come back to the parents. So that's it for Australia. Some of this Austria.
It's not a good place to live. What is Austria say?
Austria in terms of inheritance and gift tax, the Australian Supreme Court and Constitution abolished the basic provisions of the inheritance tax
It's in Austria.
in 2008. Then also the Gift Registration Act, Austria introduced the Gift Registration Act. Typical, that was included in 2008. Then they have the General Gift Registration Act requires notifying certain transfers of assets arising from gifts where one of the parties is a resident in Australia.
So if you stop right there, and Sasha said that she would take her inheritance and give it to someone else. She still doesn't pay inheritance tax. What was never said? Gift, you have to register. So who loses? So who loses? So she don't want it. Because she don't pay it. But she still has to pay it. So that's poison bids. That's all she
It
says.
says the gift registration requirement applies to securities, cash, shares of companies, and tangible and intangible assets transferred, and it's as of 2008. And then real estate transfer tax, real estate transfer tax is levied on real estate assets and the transfer of properties to the successor. And then
So that's a different one again. Rather than pure inheritance, they have to give a state transfer. So how do you use on the mother land?
You transfer it.
Real estate transfer tax.
and they talk about endowment tax, they refer back to the inheritance and gift tax that has been abolished. However, a new endowment tax was introduced, which can apply for donations to trusts and
And I
foundations.
see they changed it.
Yeah, they
You heard that? They will abolish inheritance tax.
inheritance and gift taxes.
They will abolish those. And then they will get an endowment.
And then,
Why did it change it?
Which is why. The captures trust.
Brazil. Inheritance tax. States have some costs.
This is the one on trust tax. Again, like one inheritance is like wait. The process. You also Belgium.
Belgium inheritance tax is levied on the transfer of property after the testator's deceased. It consists of two types of tax, succession and transfer tax. And then the gift tax is levied in a form of registration duties on the donation of real or immovable properties during the lifetime of the donor.
So you know some people try to say they avoid all the rules of the law of succession by giving the gifts prior to their death. That captures it.
or in return for payment is not tax in Belgium. There is no endowment tax in Belgium. There is no net wealth tax in Belgium.
What's in Canada?
In Canada, they do not have inheritance taxes or gift taxes. They have something with regards to the real estate, called a transfer tax. So if you are selling a property or you're giving it away, then you will be taxed on that. They don't have any tax with regards to wealth. They don't have a net profit tax. And the person is subject to the taxes of Canadian residents. They will find it on the salary of residents. They stay like local system well, who is a resident?
So you notice that the trend is they don't tax wealth.
They also make exceptions. They have capital gains exceptions. They have consequences of value exceptions. And then they go say that the value exceptions are China. Yeah. They don't have Canada, they don't have tax.
This is on succession. Something on the name, yeah. What is China? Are they customers?
In China, they don't have any inheritance tax, they don't have tax. They have some sort of real estate tax, but that is subject to business taxes and stamp duties and tax taxation. And then they would not there's something like this. It's simple, it's like, oh, they also do not have to transfer to the north, they have a tax. Who is liable? In general, China would exercise tax evasion, the transfer of real estate, or the use of land of rights of land located in the territory of the current China, regardless of whether it is domicile or residency status. This is for the reason. Real estate outside of China, in the event of transfer of real estate outside of China, no specific tax regulations are related to direct taxation of such transfers except provision in the IRT or IRT laws tax. So I guess if you compare it, I guess it was also that mistake. Yeah. Regards to there's no net tax in China, life insurance, life insurance proceeds are exempt from IRT. There's no estate tax.
Well, Cyprus.
There's no inheritance tax in Cyprus, no tax in Cyprus. There is a transfer tax payable to the property tax, there is a transfer of property, so that will enforce to the sale of the entity. Endowment tax is endowment tax in Cyprus. Transfer duties and credit duties and endowment tax in Cyprus. For the most part, it is tax personal income. Also in the property.
How the inheritance tax, they have gift tax. Okay, real estate transfer tax, they have, but it starts subject to new estate tax. Then they have to minimum type of property classification. They have the selected personal tax implication, that goes to like where sale of real estate, right? And they have like where is it there is or where sale exceeds 6 months. And securities, they have classroom spirit, right? Person who can classify the person with the class. Okay, they have no endowment tax, they have no transfer tax, they have no net bell tax. There's an item. Also we have trust foundation purpose funds for that. It's not good. Assessment evaluation is not good. Grants, not good. Life insurance, not good. Simply not good. It's a cost. Checkbook has not included any cost fees related specifically to the taxation case. However, most of those taxation fees included by the checkbook will be paid within 80%. That law American class has a case on improvement of the concept. They have their points and classified as their alcohol and their state tax. No state tax, transfer taxes. Transfer taxes, but however, the registration transfer.
Okay, come read.
Okay, the same, right? They said they have no listed transfer tax, but however, the registration transfer is immediate. But Charter Foundation certain charter
I'm sure there's one jurisdictions. Get it? Say it again.
Trusts are not recognized in the federal taxation system because there is no specific endowment tax. Asset growth into the trust are taxed according to the regulations and percentage of funds. And they already are taxed, but they require a credit from the state group. That's really shocking.
France. What's France? City? Is it blue? Yeah, they all say that. Let's go. France. Tell us about France.
Inheritance taxes are due for all transfers of time of death, regardless of whether it result in legal succession, a will, or a gift due to deaths, such as a gift between spouses.
So that means if you're spouse will do something with the guys.
Gift tax, taxes is doing fines on a gift when the donor or the donee is a French resident or when the gift concerned is an asset located in France. Real estate transfer tax is the transfer of real estate in return for payment, as well as the transfer of real estate rights in return for payment is a principle subject to a real estate registration tax. And we are found pursuant to transfer of duty. All transfers of ownership of real estate or real estate rights are subject to a registration duty at the rate of 7% for the registration of the transfer at the mortgage office. This duty is calculated on the market value of the property or right transferred and is paid by the new owner. The wealth tax, property tax, residence tax, 3% tax on the market value of real estate. That seems to be it.
That's a lot of tax.
That's a lot of tax.
That's a lot of tax. Germany?
Germany,
So far, France has the most tax.
Germany has inheritance and real estate tax. Well, real estate transfer tax. Anyway, Germany has a unified inheritance and gift tax collected. First own something, which was reformed effective 1st January 9 and amended 2010 to 2011. ERBST is imposed on any transfer of property at death or by gift. The basis of assessment is the benefit accruing to the transferee. ERBST is regulated on a federal level, although the tax revenue is assigned to the various federal states of Germany.
India has no inheritance tax. They have tax on gift, transfer, levied on the donor, that is, on transfer. They have no endowment tax, no real estate tax. They have stamp duties paid on respect of transaction executed through instrument. Oh, that's on the transfer of movable or immovable property. They have stamp duty on that. They have net wealth tax at 1%, and it's taxed on their worldwide wealth. That's it.
Indonesia.
Indonesia going over there.
They moved there? That
Yeah.
was why.
They have no inheritance or gift tax, no endowment tax, no net wealth tax, only a 5% payable on transfer of land. That's all.
Ireland?
Alright. I have Ireland also. Okay, inheritance tax is, they don't have an inheritance tax, they have a capital acquisitions tax. That's levied on inheritance and gifts. They only pay stamp duty on transfer of all assets for real estate. There's no endowment tax. And there's no net wealth tax.
We can't look at our next people and say no.
That's how it's done. But I got it, he mentioned it in the first round, so that's why I want to ask him what I want.
Let's go, let's see. Who does have round one? Italy?
Okay, if we have inheritance and a gift tax, And the tax is levied on the net share of the inheritance or donation class to the beneficiary, which is net of liabilities and deductible expense, debt of the deceased funeral and the medical expense. They have a real estate transfer tax, which is broken out into mortgage tax, which is 2% of the value of the property, and Casandel tax, I don't know what it is, which is 1% of the value of the property. They have a transfer duty tax, which is levied on the transfer of the real estate. In the case is different from inheritance and endowment. So the transfer tax range from a fixed amount of €168 up to 7% of the value of the real estate, depending on the specific feature of the transfer. They have a net birth tax that was enforced in 2011, which is the wealth tax on financial assets held abroad by individuals resident in Italy, has been introduced at a rate of 0.1% per year of the value of the financial asset. And then they changed it and they started in 2013, that rate was increased to 0.15%. And then they have in tax year 2012, they have a new tax on real estate held in Italy, replace the ICI tax. And the new tax is an IMU tax for non-residents in relation to tax for Italy. Japan has an inheritance tax, which is breaking down. The inheritance tax is imposed on individuals who acquire the property by inheritance or bequest upon the death of the deceased. And then they have a gift tax, is a tax supplementary to the inheritance tax. Both tax are national tax, and no local tax is assessed on the transfer of property due to death or gift. They have a real estate transfer tax. Endowment, there is no endowment tax in Japan, no transfer tax, no net birth tax. And in reference to the real estate tax, you have like a registration and license tax. The registration of the transfer of ownership of real property by the inheritance or bequest is subject to registration and license at a rate of 0.4% of the assessed value of the land or building. The registration of the transfer of ownership by gift or sale is generally subject to a registration and license tax of a standard rate of 2%. At present, the rate for land and residential building is tentatively reduced. And then you have a real estate acquisition tax. Okay, acquisition of real estate by gift or sale is generally subject to a real estate acquisition tax at 4%. And then that's it, yeah.
Do you notice the trend that there are nowadays people in real property tax in terms of the system of the property? It's based on income generated properties.
So they only have,
Flat.
they only have transfer of the property.
Transfer of
Transfer of the property,
Yeah.
Okay,
and if you acquire the property,
that'd be right.
if you did, yeah.
That's the penalty is.
Mexico, let's do them summarize. We may go get Mexico. What's Mexico?
is levied on all assets worldwide. Gift tax is there, it's valuable. Real estate tax, paper and real estate tax, among the property taxes. Net relevant tax is non-existing costs. Also to trust example businesses.
New Zealand, that's around here.
New Zealand. All form of the state duty or inheritance tax or capital transfer tax, gift tax has been abolished. It's made after the first of 2011. No form of real estate transfer tax, no form of land tax, no form of transfer duty, no net realm tax.
Fine.
Now some called goods and service tax, which is similar to that.
See, you hear what she said?
Fine.
You know what she said? Okay. Alright. Just kind of know it. What's not really know it?
They have the unified inheritance and gift tax. The inheritance tax can be deferred. The gift tax is levied on any gift given for not full economic benefit. Well, sorry. The transfer of that economic benefit without full consideration. The real estate transfer tax is not before, yes, they have an endowment tax, and it's only levied if the gift will have been subject to inheritance tax and was given directly from the donor to the recipient. There's a transfer duty, and yes, there's a net wealth tax, but only on the portion that exceeds a certain
Philippines.
They used to have both an inheritance and an estate tax. Now they only have an estate tax for estates over $200,000 in value. There is a gift tax for gifts in excess of $100,000. There's an estate transfer tax, whether that transfer is made by inheritance or not. There's no endowment or net wealth tax, and no transfer duty if the transfer is made by way of inheritance.
Poland.
Individuals receive inheritance, the defendants, individuals, or spouses, descendants, or ascendants are exempt from tax and be declared to their respective tax office within 60 months. There's no gift tax, then there's no estate transfer tax. Since persons would be exempted from that, or because of the fact that it would fall into the tax on civil law transactions. And the TCLT on the transfer of real property is left at 60%. There is no endowment tax. There is a transfer tax, it's going to be TCLT. There's no net wealth tax.
Portugal.
For Portugal's inheritance and the tax gift tax were booked. Therefore, inheritance and gift tax became the subject of a stamp tax. The real estate transfer is levied a levy level. RECT is levied on the transfer consideration regardless of how such transfer is carried out. There is registration fees for the real estate and real estate properties. And the registration fees are relatively low. There is no net wealth taxes.
Question,
Okay, go ahead.
Switzerland, I think it should be, between 7 transaction. The state said that they have inheritance tax. And then it comes, like I said, the spouses, spouses should exempted from inheritance. Yeah, wait, and this here, and yes, listen, it says here that the exemption, spouse, surviving spouse, children, exempted.
Currently, the Russian legislation does not consider any special taxes with regard to inheritance or donation. The abolishment of inheritance and gift tax, personal income tax applies at certain instances that individuals receive gifts. In certain cases, individuals receiving income through inheritance may also be subject to personal income tax as a regular taxable income. And there's no inheritance taxes in Russia, there's no gift tax, no real estate transfer tax, no endowment tax, no transfer duty, there's no wealth tax. However, there have been discussions with respect to changes in taxation of wealth.
That's a question.
The draft law proposes calculating the bracket tax rate on a progressive basis in connection with either the total value of the property or the total floor space of the property.
Jurisdictions that have abolished inheritance, we cannot tell you the fees of
You said they replace it with VAT?
Singapore? I'm saying you look around, because if you had taken this room and looked by yourself, you would never go to this room or something else. That's why I say it's good enough when you all look at it. At the end of the day, just based on the jurisdictions, you should know from those that abolish it, what do they replace it with?
Singapore generally does not impose inheritance tax, transfer duty, or wealth taxes. However, there are tax implications for certain residential property sales, transfers or appointments to the will or withdraw gifts, estates, or continues to generate income after death tax. As of February 19, 2011, fixed duty for most instruments upon the distribution of property to a beneficiary. The state has been abolished. Anything before that, a normal fixed duty remains applicable. The fixed duties payable if the properties are distributed according to the individual's will or the intestate succession act. Gift tax, for any conveyance or transfer operating as a gift, the document shall be chargeable with stamp duty as a result of conveyance or transfer and sale. Real estate transfer tax, there's like a seller's stamp duty payable upon the sale
I can see.
of the property.
Maybe.
There's no endowment tax, no transfer duty, no wealth tax. However, they do have estate income, which is quite detailed.
It's South Africa.
Well, I need to see you.
Yes. Class of that value. With regards to assets, it's about the economy gap. Persons liable to persons ordinary resident inside of the property. Is inclusive of number one property.
See, the thing is, we want to
Also includes life interests. So
I
these have to be inside that. Money is recoverable under life insurance policies and access of premiums. This name by the deceased is often like that as a donation. Property that the deceased had power of disposal of. usually apply to the police. Revenue tax, which is applicable to lifetime transfers of property. Transfer duty. There's a transfer duty. It doesn't apply to transfer.
Yeah, let me see.
To the answer fund now.
Yeah, I need to see what that is coming on. Let me look at what
Tax. Capital gain tax, which is not going down. This is not down, transfer of property.
What's the United States? What's the USA?
Was that also?
Which country you visited before that had lots of taxes?
France.
So let's see comparison with the United States.
They have state tax, gift tax, state tax on transfer of descendants, tax on the state. Retained interest. Retained interest applies to certain periods, death, transfers, retained estate, transfers taken effect, death, certain release, interest on jointly, transfers applied, or tax on property, or transfers. We don't have a lot of tax, transfer tax.
That's the law.
Net wealth tax, expatriation tax, generations, skipping, transfer tax.
United States must be UK.
It's a lot more to
Yeah,
it.
the UK.
The United Kingdom has a unified estate and tax called the inheritance tax. The inheritance tax applies to the value of an individual's estate when he or she dies, in which case he or she is deemed to make a transfer of the whole estate immediately before such time. There is no specific gift tax, although certain circumstances can trigger the inheritance tax charge. The UK levies a stamp duty, land tax charge on transfers of land and buildings. There's no specific transfer duty in UK law. There's no wealth, no net wealth tax.
So when you sum it up, what did we learn? Go to New Zealand?
Indonesia is the place to go.
Okay. So what we've done is we've looked at taxation in terms of succession in detail. You know that most of the times when persons put their funds in the trust, some of the funds by way of succession. Giving you an article where you would see countries where we have just visited and now seeking to get funds from that are placed offshore in order to tax. It's the current trend. I think not the read that, the small stuff. point where we got more. No, one more thing about Your 5 pages. Someone else.
Just put in
Send, yeah.
Shire. EY created a PDF.
Okay.
The same thing.
All this different.
Yeah, that's right there. Search that and look at it from yeah, right.
I hear you all doing something wrong. Who's taking this? All the countries.
That's what?
Yeah, what about whoever? Anyhow,
If nobody wants it, I'll take it.
this is what I want to leave you with. We've gone through all of the jurisdictions. Look at the Bahamas. Look at the various areas in which the government can tax persons, whether it's through the law of succession or through trust. And you see a lot of them will have wealth, taxation of wealth, more or less comes from income and from transfer. So the OECD has taken a key role in international tax policy, we know that, because they have established most of the modules for taxation. Membership of over 34 countries, including China, India, and Brazil. And each country is drafting its own tax legislation. And this gave you a handle where Brazil is now introducing new measures to be funds that are placed offshore. So trust practitioners are to view that factor is an isolationist tax policy, which means that they're only focusing on their needs, not looking at the broader international tax policy. Overall tax goal by OECD, other international legislation focus on encouraging cross-border trade and investment. Remember one of the main issues in the law of succession have opportunities in other countries. Because there is laws, there are regulations. OECD and EU have planned a course towards reduction or elimination of withholding taxes pursuant to multilateral tax treaties and information exchange programs. That is the trend. This is Bahamas. We have about 31 or 35. So what we have seen is a rigorous program of tax treaty negotiations by the US, EU, and UK. And these policies aim to protect each country's tax base by providing certification and information exchange in low withholding tax environment. That's us. Additionally, we have seen a drive to enforce tax information exchange through tax savings, which in the opinion of trust practitioners has been to the detriment of offshore islands. We've seen a collaboration between the US, the EU as countries such as France, Germany, Spain, UK, the partner in the US, and this makes the efforts by the IRS more reasonable and may reduce the impact on financial services industry. Moving forward, what we see is a multilateral approach to tax legislation, with other jurisdictions establishing bilateral or multilateral legislation which will benefit their country, thereby eroding their revenue pool. What is needed is for countries in regional areas to work together so that they are requesting the same information from the US. Other countries have to implement mechanisms to apply from the US with respect to their own residents. And lastly, the challenges. Those are countries with different tax systems, different approaches to foreign source of income, foreign domiciles which will have to change so that information is seen as well. These are your considerations and challenges to face this new regime of taxation. Good luck. I hope I get good results. Everyone is paid $379.06. Double check. On taxation. Just a little more, right? Okay. That's missing? Yeah. Okay, I'll take that now. This is the back. Alright, I'll make it. Most welcome. We'll do all your reading. Again, the next speaker comes, we will have lots of questions. You're well informed on taxation policy around the world. Don't let me down because I listen like ask. You sorry? There is a website on that, you know. It's an international website. And it gives you all the VAT ratings and all the changes in VAT regulations and policies. No, what I'm saying is you can take your taxation listing, you take the last sheet that's in this handout, if you wanted to just print a last sheet, when I read from the countries, you take the last sheet, and you can take that, and you can put what is the main source of taxation for each jurisdiction. And on the side of that, you can state whether or not they have VAT percentage. Even perspective of the taxation policy in that jurisdiction. That ain't hard. So don't read that. Page 379. We get
You're not gonna take it over and take it.
That's why you don't be moving.
Unless you do that. You got an hour for that.
You ain't gotta use it fork, man.
I ain't got it down here.
Yeah, use it fork.
There we go.
I missed
I know, right now, just see, just keep pulling me. See? I know, I sit by me now.
I agree with that. I only want to see it.
Oh, they have it.
She's not confident. I got to put it.
I can say just no more.
I
don't know that. Last week I
All the time. Talk to me.